I want to talk about the PBOC. I want to talk about the rate cut overnight. Obviously, widely anticipated. People were looking for it. Is it enough?
Is it enough? Probably not. If you listen to the economists out there, Nomura, for example, they've downgraded their forecasts for China's economy for next year to 4%, which in the context, of course, is relatively weak when you expect, and many people expect some of these measures to have eased by 2023. We'll see if that indeed happens. Will it be enough? No, probably not. So you had a triple R cut. This is the reserve ratios within the banking system, cut by about 0.25%. But it is building on these efforts by officials to try and put a floor under this economy. It's going to release about 70 billion into the banking system. A key question really is whether they can actually shift those funds to businesses at a time when so many parts of this economy are closed off. Can they actually get that funding into the real economy? That is going to be something to watch. It's the second time they've cut reserve ratios this year. They've cut the benchmark lending rate as well twice this year, and they've unveiled a package to try and support the beleaguered property sector, as well as this step-by-step plan to have a more targeted approach around COVID zero. We've just been talking about how badly that is going. So yeah, the challenges are there. They're trying to get more liquidity into the system. Whether or not the banks are prepared to lend it out, whether or not the businesses are prepared to take on that liquidity, I think is another question.
Tom, I mean, you hit the nail on the head there, right? It's about bank lending. It's about demand for housing, right? I mean, demand's fallen off a cliff also. I mean, talk to me about some of these measures and how it's going to impact China's property sector. We know the pain that's going on there. You know, demand from households for housing, banks' willingness to lend to property developers. Talk to us about that. Can we expect that to change in the months and year ahead?
Yeah, and for the context, the property sector makes up about 20% of China's GDP when you tie in all the linkages from the property sector, about 20% of GDP. So they've come out belatedly, many would argue, with this package of measures to support the property sector. They've done things like they've corralled the biggest lenders, the biggest banks, got them into one room with some of the major developers and said, look, work out some of your differences in terms of addressing some of these loans. They're going to be focused on the developers that they think ultimately can go through and survive. They still don't want excessive borrowing within the real estate sector. Their key concern with making sure that properties and developments get finished, that those people who put deposits down on houses get into those properties, and that doesn't trigger further social unrest. But in terms of the excesses around the bubble and the build-up of credit and liquidity within the real estate system, they want to see that avoided. It's a very, very difficult balance and very, very difficult and fine needle to thread. But most people do think this package of measures should be enough to at least put a floor under that property sector.